Now, I do like to start off the beginning of each week just talking about what we saw happening this week in the market. As of the beginning of the show, we were up a little bit today. We were down some, we were up some. But so far this week, we've actually been down, 4 days in a row, Monday through Thursday. Even though Tesla had a great earnings report, or at least their earnings report was actually good, but their forward guidance and the excitement that they were talking about what they were going to be able to
Hmm.
do, they jumped like 20%
Yeah.
basically. Yeah, for a good sized stock, that's a lot of money that got made in one day. However, if you look closely at the chart that I have here that we've been looking at for quite some time, this goes back into the middle of 2018. That little blip right up there at the top that's circled in red is the downturn for this week, which is, pretty minor in comparison to, the overall movements that we've had going back throughout time here. So things are still going quite well. We're still in a primary up direction. Still feel very confident in the market as a whole. This not a lot of things were reported this week per se on the economic standpoint, but more so in the earnings area,
Yeah, it was
right?
a lot more earnings
Right.
week.
Yeah, I mean, the telecoms came out today. That was kind of a mixed bag. Not today, this week. It was kind of a mixed bag. Of course, Tesla is big. Next week is the big week, right?
Yeah, you got PCE, you have some of the major tech companies. It's going to be a pretty exciting week.
Yeah, exactly. So PCE is that inflation indicator that the Fed pays the most attention to, and it's going to, come again late. Here's the end of October, but it'll tell us what inflation was in the PCE, personal consumption expenditure basket. That could have an impact actually, because the market is reacting, to the fact that we've got a scenario where possibly, maybe they don't lower rates as much as thought
Hmm.
because the jobs report has come out pretty well. The retail sales report over the last couple of weeks has come out. Was very hot, those types of things. And so the economy is doing incredibly well. Should they still be lowering rates in that environment? They consider it restrictive in terms of the rate is higher than what they would call the neutral
Yeah,
rate, which is
neutral.
I don't if you can figure out what the neutral rate is, because even when they interview them and they talk to the Fed governors, I'm not sure they know either. But let's just say it's 3% for the sake of argument, and we're at 5, and so we're still dragging on the economy. And even though the economy is good today, that drag could create a problem in the future. 6 months from now, 18 months from now, all of a sudden we're in some big recession because they didn't lower rates. And so it's what makes it so difficult for the Fed is that you've got current data that's coming in that is showing certain things. In this particular case, that things are pretty good. And then, but the worry is because we're past this neutral rate, we might be dragging on the economy, and we'll find out too late that we should have been cutting rates
Hmm.
in November. With November 7th is the next piece, and so there's been a lot of attention paid to why the market's coming down this week, and I'll give you my opinion. It's not what I'm reading in the press, but because what the press is talking about is an increasing interest rate. So, like the yield on bonds has been coming up, which makes sense. There's two potential reasons that yields are coming up that I keep reading about. Number one is things are better than expected, right?
Hmm.
And so the bond market, the yields on the bond market came down quite a bit just because during the summer, there was some soft pieces being shown, especially in the labor market. And now it's starting to come back up because, again, the labor market's getting better, big hot retail sales report, those types of things. The other thing is that we have a presidential election right now that is very, very tight. And basically the platform that Trump is running on, and this is the articles I've been reading, looks inflationary, right? Because if you start to do tariffs, right, on products, that's inflationary. Boy, they had like a bunch of economists coming out
Hmm.
talking about that. If you deport illegal immigrants from the country, which may or may not happen, but is part of what he's talking about, those are where that's basically the lifeline of our food comes out of that group as far as that goes. So who knows what actually happens? The rhetoric on the campaign trail and the actual what you can do are often two different things. Um, but both of those are putting pressure on the yield market. And the thought process there, just to go to the extreme, if I could get a 10-year treasury at 10%,
Hmm.
okay, I'm not going to buy stock market that's been averaging 11% over the long term because I can guarantee my return from the U.S. government over the next 10 years at 10%. Now, we're not at 10%, but we're at kind of in that 4.5 range over the last several periods here, and that becomes more competitive because we've seen it a lot. We've seen clients buying T-bills, CDs, things that they weren't buying not that long ago when rates were so low. I mean, when you could get a CD at less than 1%, people weren't that interested because now the market's making 11. So that's a really important component to understand about the whole market is that sometimes the competitive forces, whether that's real estate or bonds, can offset the potential gains that you might get in the stock market. And so it's why you kind of want to have a diversified portfolio. You want to have that bond market portfolio and that stock market portfolio, and hopefully some real estate. Usually it means your own home, as far as that goes, to kind of compensate for when that money is moving around, as far as that goes. However, I'm going to throw in another reason why I think the market's having some trouble this week, and might continue even a little bit here, and that's because of the election. Okay, so there are forces here. Well, here's the thing. After the election, if the market's going up, we still have these same inflationary forces, right? And all of a sudden that storyline gets dropped. And so usually what the news is trying to do is attach something to this, to actually what's happening, which makes sense. I don't have a real problem with that. But if we look back, we presented this chart. There we go. We presented this chart some time ago. This is elections, presidential elections going back to 1952. And so it's the Dow, the S&P 500, and the NASDAQ are the three big columns there. And so it's just 2 months before Election Day. What happens to the market, right? If we look at the market, the one that's really, really went up was 1996. I mean, the S&P 500 was up 10% over that. That's unbelievable.
Yeah.
But it kind of sticks out also, and that was the time frame we were dealing with the dot-com bubble that was happening, and the market was super strong and what have you. But if you look at virtually all of the elections since 1996, with the exception at the S&P 500 was up 1.1 there in 2004, but the last 5 elections, 4 elections, all negative. Yeah, on the S&P, negative 18.7, 0.3, negative 1.9, negative 2.5, etc. And so that would be the expectation that I would be thinking is going to happen. And again, my explanation for this is that there is some money that might be held back during that 60-day window because we want to see the makeup of Congress, which might be more important actually than who the president is. Is it bifurcated? Is it all one party? How does that party relate to who's in the White House? Is the White House and the Congress completely controlled by one party? The thought process there is more of the agenda could get done. It would be good as an investor to know what the agenda was and maybe to bet on that agenda, right? Because now they control everything.
Yep.
I don't happen to agree with that personally because too many things can happen. I'm just going to respond to what the market's doing, all right? But that doesn't mean that there aren't other people out there doing the same things. And so that money that gets held back in that 60-day period just starts to come in once we know the results. Once the clarity is there and we know the results, the market generally does well after that. And here's a good example. So this is 2020, the last election.
Yep.
I've highlighted here September, October, not exactly 60 days, but we'll get the same point. You can see in September we had a pretty good sized drop, right? I think that was about a little over 10%. Then it came back almost all the way in October, fell again, right? That's the norm. First of all, seasonally, September is a negative month, going back to 1928 anyway. And so you combine that with the uncertainty. But then look what happened to the market just before the election and then continuing on after. I don't know, that's probably not quite a 45-degree angle there, but pretty close, right? It continued to move up. Again, that's kind of the norm in this case. And it happened, in 2016, the market went up when Trump was voted in. It happened in 2020 when Biden was voted in. So it doesn't seem to really matter who is elected president, at least in this time frame. I think longer term it does. We saw, Trump was going after tariffs at the end of 2018 in China, and the market dropped 20% because it doesn't like tariffs. And so, the inflation could be roughly correlated with the big bill, the $1.9 trillion bill that went out for the COVID relief at the beginning of 2021. Inflation
Hmm.
started right after that, et cetera. So there are things that can come out of the agenda that can affect the stock market one way or another, and even the economy one way or another. However, in this time frame of the post-election run here, it has typically been quite good.
Yeah, because the next president doesn't take office till next year, so you have a
That's
few
right.
months of just this kind of dead, a lame duck Congress, kind of in a sense.
Yeah, and you're sitting on an economy that's doing well. You're sitting on earnings that are growing, and the money was out of the market that might have been in the market for that 60-day period comes rushing in. And so, again, I think we just have to have some patience here. Don't be surprised at all if next week isn't also a down week, in my opinion. Um, the thing that can drive next week, though, is the earnings of these big
Earnings
companies.
of
Yeah,
PCE.
it's kind of it's an interesting mixed bag. I always like an Amazon will come out with something I think looks pretty good. They'll say a few things about their forward guidance and lose 6%.
Hmm.
So it's hard to tell with earnings what's really going to happen. As a matter of fact, in my experience, during the heavy portion of earnings reporting, the market just kind of goes up and down all over the place. Once that's over and the totality can be looked at, we realize, hey, 70, 80%, let's say, for example, of the S&P 500 companies exceeded their earnings expectations, and the market generally can start to move again. So, we're going to have an unusual 60-day period because September was actually up this year, right?
Yeah.
Which technically, if you look back, we did present a chart in our show some time ago that during presidential election cycles, September is actually slightly up
Hmm.
versus being slightly down across all September timeframes. And we kind of achieved that. We weren't up a lot, but we were up some because it dropped a whole bunch, just like it did here, kind of in that first week. And then recovered and actually made a positive month out of it, unlike 2020. But I think that rate cut was the differential. There was no rate cut in this time frame
Hmm.
prior to the last election. So having that half a point, which was somewhat of a surprise to the upside in terms of the size of that. So I think we just have to exercise some patience and stick with what you've got, and let's wait and see what happens. I am a little bit thinking that the market might not do quite as well after the election because it's already done fairly well. If we go back and look at the market here, it's done pretty good. I mean, it's up there already. So stretching that even further on a year that's already had a big gain, we might not have the same kind of explosive growth that you're kind of used to after a presidential election, just because of the fact that we're already up there and it's already done quite well to get there. And maybe we don't have exactly the same stretch to the upside, and maybe that's better. Honestly, I like that slow, steady growth in the market where the earnings can kind of keep up and the market doesn't get so overpriced. It is out there already, so keeping that gains at a steady pace, I think is better. It doesn't really work that way. This market is a representation of human emotion,
Hmm.
and we are nothing but slow, steady pace is just not our as especially when you're talking a group mentality, which is what you're talking about here. So anyway, it's been a good time frame to be an investor. Really interesting time frame. So we'll continue to watch things. We have had very little changes in our portfolio recently. We were getting a lot more rotation in the summer than we are getting now.
Hmm.
Just from what's coming up in our list of ETFs that we're following, what have you too. So anyway, good time to be an investor. Stick with it. Let's see what happens after the election before we start to draw any real conclusions about what's happening now. I think that force is larger than whatever forces we're seeing that are coming in and reporting, economic reporting and earnings. I think that force outdoes it, and then maybe that force continues to outdo it on the positive side after the election. So let's see how this plays out. But thank you for joining us. I love covering these. I wasn't able to do, Monday through Thursday, the daily, so just being able to do the weekly this week is good. Other than the fact that the market dropped all 4 days, that I didn't get to do the video. There wasn't actually a lot of news that was super, constructive as far as I was concerned, maybe except for the Tesla story, which I think is kind of fascinating.